So, what is business continuity and succession planning? Well, it's a mouthful of a title and something that most business owners have never dealt with. And in my opinion, simply because they don't know it's available to them. The one title covers two interlinked subjects. So firstly, let's deal with business continuity. Think about this for a moment. Who at your work is responsible for the profit of the business? This could be one position, such as the sales director, or it could be a couple of positions, such as the production manager, the finance director, an area sales manager, or a technician, for example. These are all known as key people. Now you've thought about these key people, how would your business cope if one of these people had died, or even worse, suffered a major illness? Would you lose your relationship with your bankers and credit terms? Could they be pulled in? Think how the business would cope if the overdraft was called in or the business loan had to be repaid early. What would that mean to your cash flow? Would you lose the business accounts that were loyal to your area sales manager? Would your customers start to move away, worried that your production might suffer? How would the remaining staff feel? It might be a small business where everybody knows each other. They might be in shock. They might be worried for the security of their jobs. Think about this one. How would your debtors receive the news? They might take longer to pay their invoices. They might not pay at all if they think they can get away with it. How would your cash flow survive this problem? How would your competitors view this news? Would they be out there poaching your clients, or even worse, poaching your staff? In brief, business continuity is about profit protection. It's very often built into your general insurance that you've taken for your buildings and your contents and your employer's liability insurance. This means you've insured the computer, the printer, the office desk and the lamps, etc. If you have company vehicles, you'll have covered these too. But have you thought about covering the driver of the company vehicle or the person that sits behind the desk? Ask yourself this: how quickly could I get a replacement computer or printer or van? I expect you've got maintenance contracts that will include replacement computers and printers within 24 hours, a van policy that provides same-day courtesy vehicle hire whilst yours is in for repair. But how long will it take you to recruit a new sales manager? How much money will you have to offer him to jump ship from his current employer? Will you have to buy him out of a contract? And what about relocation costs? How long will it take to train them? And what about the income for the business in the meantime? What we're talking about here is key person cover. This is getting the right money into the business as soon as possible to clear overdrafts and loans, provide the recruitment and the training costs, and provide a buffer for the company whilst this event is dealt with. Now, did your bank manager offer you a self-cancelling loan when you took out the finance? Well, my clients get them as standard. Now, moving on to succession planning, it's similar to continuity planning. It is for the directors and the shareholders of the business. Sometimes they can also be key people, as mentioned earlier. Now, imagine this business situation. For this example, we're going to use Bill and Ben. And Bill and Ben are two co-directors that own a business. Now, sadly, Bill dies. Bill's share of that business will follow the wishes of his will. But does Bill have one? That's the first point to look at. This now means that Ben, the survivor, is now in business with Bill's widow, Jean. Here are some of the challenges that Ben now faces. If Bill was the majority shareholder, Ben must ask Jean for permission to do anything. Although Bill and Ben had become good friends over the years, Bill didn't get on well with Jean. Can you imagine how the board meetings go? Does Jean know anything about the business, or indeed running any business? What if Jean instructs her lawyer to act on her behalf to protect her interest? How often is Ben going to want to have a meeting with a lawyer? Does Jean just want her income each month? Does Jean want to be bought out of the business? If so, how does Ben control who Jean sells her shares to? And if so, how much for? And where does the money come from to buy them? Ben also has a moral dilemma. If he is concerned for Jean and her children, how will they survive? He starts thinking, what if it happened the other way around, and it was Ben who died? How could they rely on Bill to financially look after his wife, Norma? So what is the solution? Well, in brief, it is a well-written cross-option agreement between the shareholders, a method for the provision of a lump sum on death or critical illness of the shareholders, written in the most tax-efficient way. Now, this is an area that I've specialised in for a number of years. I need you to remember there are only three ways to leave a business. You can be carried out, you can be kicked out, and you can be bought out. I can ensure that your future is safe whichever route you decide to take. So thanks for watching. If you'd like to find out more, please visit our website allthingsfinancial.co.uk.